everyone, and welcome to this Portfolio Partners Fireside Chat. Today we have Liam Hechter from Anchor Capital. Liam has been with Anchor since 2014, before which he studied at Stellenbosch, became a CA, and also got the CFA charter holder later on, I suppose. But Liam saw the light, realized that being a CA wasn't going to be much fun, and decided to join the exciting world of investment management. So welcome, Liam, to the show.
Thanks, Jim. Thanks for having me on.
Just so that you know, people, Liam is based in the Anchor London office. Although he's a proud South African and a now proud cricket supporter, thankfully, he's constantly talking to the team in South Africa more or less every day, for the management of funds on behalf of Anchor Capital, and one of the funds is the Anchor BCI SA Equity Fund. So, Liam, let's start off with something that's very important to everyone who watches these programs, and that is the performance of the fund over the most recent periods. Would you like to comment on?
Oh, sure.
Thanks.
Yeah, thanks, Jim. So listen, the fund was set up specifically the Anchor BCI SA Equity Fund, which only invests on the JSE with a capped SWIX benchmark. We kicked the fund off in August 2021, but really it's a follow-on from a process that started in for me personally, 2014, but a fund that we started a year before that in 2013 was the Anchor BCI Equity Fund. That fund is allowed to trade a bit of offshore as well. That we've got this fund that specifically trades the JSE, and it can be used as a building block for SA equities, easier for a larger pool of the investors to understand how that fits into portfolios and the asset class. So very much a continuation of a process that's been embedded for many years now. The performance since we started the fund has been pleasing. It's been in line with our expectations, possibly having exceeded them as well. When you look at our process and our investment philosophy, and that we apply to not only South Africa but emerging markets and global developed markets as well. There's a common theme there around quality and growth. As you can imagine, in South Africa, it narrows your investment universe down somewhat. So at times, the South African equity market might not necessarily give you the performance that you're looking for from those limited number of quality/growth counters that you've got in South Africa, and going through periods where commodities drive performance. The process really had to adapt and find a way to ensure that the fund wasn't left behind in those periods. So I think talking to the performance, there's been times when I think back to last year, also. There was times where our investment philosophy and style is really suited to the market. Where the market's a lot broader, like you had last year, where growth estimates were revised higher. All of a sudden, our investment universe was opened up quite wide. Good performance from quite a wide spectrum across the local market. So talking to performance, those are the types of markets that I think suit our style.
Great, and it's good to see that you're ahead of the benchmark over the full period, which is actually quite hard to do. A lot of people don't seem to realize that beating the benchmark, you've got to know quite a bit about the winners and losers to do that. Okay, Liam. So that's a good introduction. Now, one of the things that we suffer from in living in South Africa is a very weak currency. Everybody says the rand doesn't buy anything. If talking about traveling to the UK, of course it is expensive in London, but the rand against the dollar is perhaps not as poor as we've been people are thinking. Would you like to talk us through that?
Yes, yeah. Listen, I think there's a couple of things that need to be highlighted here. So, firstly, this is a chart of the rand versus dollar over the last 5 years. You're going back to a period sort of just after COVID had hit, middle of 2020. That's now into the 5-year numbers. And over that time, the rand clearly has a degree of volatility to it. But I think most of the listeners wouldn't appreciate necessarily that the rand hasn't actually gone anywhere over the last 5 years. It's largely flat. I think that South Africans tend to get fixated on the internal politics of the country and the state of affairs of the country without seeing it in the context of what's going on in the rest of the world. The larger factors that are going to influence a currency, things like terms of trade, what the difference between our imports and our exports are. South Africa's got an export economy in certain commodities. So when those commodities do well, it's been very good for our country. There's certainly swings on sentiment. There's no doubt about that. But when the fundamentals come into it, even though the rand is flat over 5 years, we still look at it like it's an undervalued currency. I mean, if you look at it, the cost of labor in South Africa relative to other parts of the world, there's a whole host of ways that you can look at the rand to suggest that it could still potentially strengthen more. But that's being said, it always carries that left tail risk in that there's a negative headline and people view it as the share price of a country. And I from sitting in London and looking around at various emerging markets around the world, it simply is just not the case.
Yeah. Well, Liam, I believe you're going to reveal to us a few other secrets, a few other things that people may not be really aware of before the end. So looking forward to these last few comments that you will be making. Now, Liam, one of the other things that people think is that, because we are in an emerging market and we perhaps are a little bit challenged with regard to the political processes in South Africa, that we may not be doing nearly as well as the rest of the world. But maybe that's not true. Would you like to talk to us about that?
Yeah, so this is a chart of the JSE relative to the MSCI World over the past 5 years. So I think another common misconception is that South African equities have been an absolute graveyard and that you shouldn't have been there for the last 5 years. As the perception is out there that things have deteriorated past the point of no repair in South Africa, on the ground. Now, while there's certainly an argument to be made that in certain parts of the economy and structurally in the economy and the country, there's been severe weakness and deterioration in places. I think, the composition of our local market, mixed with a couple of the factors that I mentioned earlier, means that South African equities have really held their own. I mean, this is a chart of the MSCI South Africa. This is the way foreigners look at South Africa. So they'll look at the MSCI South Africa index. And it's largely kept up with global equities over the past 5 years. And earlier I was just having a quick look at the charts. The JSE capped SWIX in dollar terms over the last 5 years has done a very, very similar performance to the S&P 500. Now that, to me, I'm pretty sure, most of the listeners wouldn't know that. The perception is out there is that, South African equities have been an absolute graveyard. Not the case. We've got a unique index. We do have a unique index that's got various pulls and pushes that rely on, a multitude of factors, quite narrow factors. That influence our local market. But yeah, just like us long-time suffering cricket fans, the quality was always in that team. And, eventually we got one through and we got a trophy in the cabinet.
Yeah. Well, that's been great news. I think if our politicians did as well as our sports teams, we would have nothing to be concerned about. So it seems like the sports people are leading the charge to make South Africa great again, if you for want of a better expression. Yeah. So Liam, that secret that you wanted to tell us is basically when people are investing in South African shares, they think they're investing in South Africa. Maybe you'd like to tell us where we're really investing.
Sure. So this is a different way of looking at South African equities. So the bottom left block is the domestic financials. I think there might be a formatting error. So that's domestic financials. But if you broke our index down and you looked at it in the context of the globe and what's really going on, it's there are certain ways that our index almost has been bailed out over time at the sort of by things that you would least expect. Invaded Ukraine, there were certain commodities that Russia big on exporting that there was a perception out there that they weren't going to be able to do that, and there's an overlap with South Africa on that, and all of a sudden South Africa get bailed out because you've got a big spike in the PGM platinum group metals that we export because all of a sudden there's fears that the Russia metals were going to get taken out of the market by sanctions and no one was going to trade with them. So that's just an example of South Africa getting bailed out almost fortuitously. Another one recently, I would say, is the gold in the gold market and globally, and the implication on South Africa. South Africa is now, if you go back hundreds of years, it was always quite a big market for gold. That's really come to the fore again over the last couple of years in South Africa and the JSE. Gold that evaporated in our index to a very low weighting when I started out in this game. It was almost an afterthought for investment teams. You didn't have to put a lot of energy and effort into analyzing the gold market. Now all of a sudden, gold is as big in our indexes as Naspers and Prosus, which, as you can imagine, is completely over-analyzed by the South African investor community because of the size of the index. Gold is now the same size. And if you add the other precious metals exposure in our index, you had about 17%. So there are these pushes and pulls in our local market that don't have much to do with South Africa. There's a lot of global consumer exposure. And then there's stuff in South Africa, particularly in the financial sector, which is now about 27% of our local market, which is highly leveraged to the interest rate cycle. And as you know, the local interest rate cycle is not only influenced by domestic factors, that is also influenced by global factors. So, the valuations of our local financial services companies is very sensitive to changes in our bond yields, changes in the currency, and the dividend yields relative to those factors. So, the South African market is one that has got a lot of influence on it by factors outside of the control of South Africa. And I would say that's potentially underappreciated by a lot of the investors. But obviously, a very healthy market, the vast majority of actual companies that are listed in South Africa still rely on domestic GDP growth. And I think the potential in the country is enormous. I don't have a particular agenda in terms of trying to sow a story there. But I mean, we look at reform narratives that creep in across the market. A couple of years ago, the Argentinian investment story has really captured the imagination. If the readers or the listeners are interested in stuff like that, I'm go and have a look at what's going on in Argentina right now. 100 years of underperformance that they're busy correcting in that country, and it's just such a boom for the local market. And South Africa a year ago, political change came in. Certainly, it's almost like a lighter version in terms of the investor perception, in terms of what could potentially happen in South Africa. Very cheap stocks still, very low growth expectations, a lot of pessimism, not willing to give South Africa the benefit of the doubt. And I think that very small changes that take place in South Africa could have an outsized impact on the growth of the country.
Well, that's great, Liam, and we would just like to thank you for the excellent returns that our clients have been receiving from the fund. And it's great to see a team that you happen to be part of, a great team at Anchor who assist in making all of this happen. So thank you, Liam. And this is all again, as I say, we all all we have time for. So thanks a lot, and thank you, viewers and clients, for watching this version or this edition of Portfolio Partners, where you get to meet your fund managers. Thanks a lot. Goodbye.
Thanks, Jim.